Hello traders and welcome to another video review. Today is Monday, February 13th, 2023. Let's take a look at the Forex calendar for this beginning of the trading week. As you can see, there isn't much of the important news scheduled for us today. We got the CPI data published from Switzerland, and as you can see, the CPI, the Consumer Price Index, is rising high in the Switzerland. The previous reading was minus 0.2%, forecast was 0.4, actual reading 0.6. So Consumer Price Index would generally would mean that this is a kind of a measure of the inflation is right now a little bit higher than expected. All day today is the Eurogroup meeting, so please be aware that there might be some kind of a remarks, some kind of a comments during the whole day. And at 2 o'clock there is a scheduled speech from the FOMC Memeber Bowman, and that's about it. That's everything for today in terms of the news. So I guess the best way to do our analysis is to take a look at majors. We are going to start with euro-dollar. Euro-dollar 4-hour chart, as you can see, plenty of the candlestick patterns is present here. Nevertheless, please take a look at this level here, which is of course the technical support. This technical support 1.0669 had been violated. We got the tweezer bottom, we got the bullish engulfing pattern, then we retrace a little bit. There is a bearish engulfing pattern, which this algorithm didn't catch up. Bearish engulfing, we're going lower, and we have the harami. We have the harami pattern here again, where 1.0669. The low here, however, it was 1.0656, so it's roughly 13 pips lower. Nevertheless, we are still trading in negative market conditions, negative sentiment market conditions. So the market is right now at the level of 38 and something. Nevertheless, it's still on a 4-hour chart. This is still the market which is under the influence of the supply. The bears are in control of the euro dollar. The retracement was very shallow. If you take a look at the level of the retracement, you can see that the price range of this retracement here to the upside was only 1.12%. This is not much. That's not even 38% of the Fibonacci retracement. So what was here that cannot pass? What the level was here that the bulls were struggling with? Of course, 1.0780, right? We had a momentary marginal breakout and then bearish engulfing pattern, which means if we read the chart correctly, the euro dollar is still under the big pressure from the supply side of the market. And what is the next target? If we break below this level here, 1.0669, where is the next target? Well, eventually the next target would be this level, 1.0636, but that's too shallow. So where is the next one? Well, the next one is the mean one. The next one is 1.0486, and this is a big slide to the downside, just as it was before, when we needed only 8-12, about 12 hours to go that far. So that was this V-shaped pattern, on W-shaped shape pattern. So please notice the fact that if we break below the support, we will likely travel way lower. So that's the euro dollar. What's going on the British pound? Of course, what is cable doing? The cable situation is kind of similar to the euro dollar. If we take our Fibonacci retracement tool and if we do, of course, the retracement, we can clearly see that this retracement is roughly 50% of the last move to the downside. Just take a look here. I got my cross, and that's the 50%. So that's the 50%, and the bearish engulfing pattern happened just below the 30% level. 1.2204 was the 30%. The high here was 1.2193, 11 pips miss. So not that much. Nevertheless, that's the clear bearish engulfing pattern. We are moving lower. Where do we move on the British pound then? Where do we move? what kind of a technical support is waiting here. The one is the low from the 7th of the February, 1.1960, and the other one is quite close to the to this technical support, 1.1935, and of course the line of the last resort is 1.1840. This is the technical support from the January this year, 6th of the January 2023. That's the bullish engulfing pattern. We have a retracement almost 50%. That's the bearish engulfing pattern, extension to the downside. We wait for the test of this level. Please notice the fact that we are trading below 50 and below 100 periods moving average. So in order to break above, in order to test, for example, the technical resistance 1.2262, the market must break at least above the 30 periods moving average. This is the very important technical resistance, 1.2273. If the market won't break above this level, then we cannot say that the uptrend is resumed. Okay, so that's a very important level. Please keep an eye on this level here. What is going on then? On the US dollar to the Swiss franc, we got the Swiss franc the consumer price index data released today. There was some kind of a reaction here. As you can see, the spread is wider than usual, so there is something going on, something's cooking there. Nevertheless, there is no particular candlestick pattern here. We retraced from the highs of 9,290 towards the lows of 9,159. Then we retraced again. However, this is not a big retracement. It looks like this market wants to get back into the consolidation maybe, and this is our technical support. As you can see, that's the other one. Much more important technical support is this one, the lows from the 2nd of the February 2023, 9,059 pips. If we put our trend line here, short-term trend line, very short-term trend line, because it's not even 1 month out, we can have this kind of a trend line here, and that trend line tells us that any breakout below it would likely means that this technical support will be, of course, tested, and then of course this one will be tested. The momentum is for now positive. Nevertheless, the level of 60 is the big hurdle for the momentum. The bulls are not willing to buy USD when the momentum is close to the level of 60 here, and what it means in the price terms, this is the level of 9,250. That's the level where the market have the objection buying the US dollar. In order to fly high, in order to break higher, we need to, of course, test the technical resistance 9,290 and then break towards the next technical level. Please notice that the 50 and 100 periods moving average is still providing us very good dynamic support for the US dollar to the Swiss franc. So the outlook remains neutral to bearish on the US dollar to the Swiss franc. Now let's take a look at the last market for today. This is of course Bitcoin. What's happened on Bitcoin recently? We moved lower, and as you can see, I got my trend line here. You can clearly see that this trend line was very, very handy in many situations, and just recently we got the test and then big pin bar here, very nice rejection pattern, and then of course new lows. Tweezer bottom nevertheless didn't work. New low was made at 21,488. Then we bounced. We have the bearish engulfing pattern, and the bulls are still trying to defend this low from the 10th of the February 2023. 21,488 is the most important level in the short term for now on a Bitcoin, because any violation of this level would extend the drop, maybe just maybe towards the $20,250 and then below $20,000 level. So right now, if we take a look at this chart, we can see that this consolidation from the middle of the January this year might provide some kind of a support here. Of course, we might have some kind of a period of the horizontal trend. Nevertheless, please notice the fact that the bulls are not able to break above the 50 and 100 periods moving average. Right now 23,011 and 22,575. It looks more like the market is ready to test this technical support and extend lower, maybe maybe towards even $20,250. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.